What's up, guys? It's Money Mike, and welcome to Rockstar News. Now, if you're feeling a little hemmed in from your mortgage rate that you got just 6 months ago, and you're thinking, man, should I refinance or should I break my mortgage? Well, it all depends on your current lender and your penalty fees that you may pay. But I got some good news and bad news for you. What's up, guys? It's Money Mike, and welcome to Rockstar News. So the big question is, with super low interest rates going on right now, should you break your mortgage? And a lot of people don't know they can do that, but you can, and there's some fees and penalties that are involved in that. You just simply have to talk with your lender and figure out how much that's going to be. Essentially, at the end of the day, it's all going to come down to the math. But, you know, right now, if you bought a home in December, and you're getting a 3.39%, which is a fantastic rate. You know, no one should, balk at that. But we were singing his praises of how low and great that is. But right now, a lot of buyers are getting interest rates below 2%. You can actually check out my last interview with Evan Batista from the mortgage firm. He breaks down how much essentially, or at least he discusses how much buyers are currently getting when it comes to a mortgage. And you can check that out in the little top bar right there. Now, when it comes to breaking your mortgage, there are penalty fees, and those fees depend a lot on what you're, depending on the company and what they decide to, put down as far as, what they're willing to, stiff you for. And a lot of these fees are going to be super high. You're talking about almost $30,000 in fees when it comes to a lot of this. It also depends on your mortgage. If you got like an $800,000 mortgage up to $1 million, you're going to pay about $30,000, dollars in fees. So a lot of borrowers don't realize that they can actually break it. But when you actually start to do the research and get into how much the penalty fees are going to be, they could be very deterrent. So you have to talk with the lender and see what they're about. It's all going to depend on your mortgage and all that good stuff, and then break down the numbers. This article, so this whole video is based off this article from rates.ca, which is a Canadian organization. And they use an example of, essentially one of their writers or one of the readers responded to them saying they had a mortgage of about $892,000. And then she had, about 25 years left on her mortgage. She was offered a blended extend rate of about 3.39%, or she had a second option of choosing 2.29%, but she had to pay some penalty fees, and they were equaled up to about $32,000. When you break down the math, with the super low interest rate, she was still saving a ton of money. You talk about saving about $20,000 over the lifetime of the mortgage, even with paying the penalty fees, even put in factor in all the other interest rates and all the essentially, like, there's a discharge process where they don't take the last payment of your discharge as well. So it's a whole complex thing that you have to talk to your lender to figure it out. I'm not going to go into details of the example, but I will leave the article in the description down below so you can check it out for yourself. But essentially, it's a really good example of how much you could potentially save if you just look at the numbers, but you got to talk to your lender first. So right now, the Federal Reserve is pumping tons and tons of money into the market. They're keeping those interest rates artificially low. So the question is, should you even bother doing it right now? Where are interest rates going to go? Well, the beginning of this year, we saw essentially the Federal Reserve was trying to uptick on the interest rates. They were trying to rein in the last decade of super low interest rates because they saw the writing on the wall. Inflation was going to start kicking in. And so they wanted to kind of, slow it down a bit. But with the whole COVID-19 and the lockdowns and a presidential election going on, every president that's, ever been around has always wanted a good economy in their back pocket going into elections. Donald Trump is no different. So where are we going to see interest rates in the next 6 months? They're probably going to stay the same or go even lower. So the question is, should you hold off on doing this, or should you do it now? Well, it all depends. Like I said, it all depends. No one has a crystal ball. No one knows what's going to go on. But elections are in November. I'm pretty sure Donald Trump and the Federal Reserve are not going to have interest rates go up any higher. So they're definitely going to stay the same for the foreseeable future. Will they go any lower? Well, Donald Trump has talked about previously in his tweet storms that he does, that he plans on, he's encouraging the Federal Reserve to even go to negative interest rates. The Fed chairman has essentially pushed back on that, essentially saying they're an independent organization. They're going to figure it out on their own, depending on, what the market is calling for, all that good stuff. So we should see, we're going to see what's going to happen, but I think the interest rates are going to stay low or go even lower by probably a quarter of a point or so. We'll see what happens. But I want to know what you guys think. Do you think we're going to see low interest rates? Do you think it's a good time to refinance or break your mortgage? Do you think it's a great idea, or the penalty fees are just too high for you? Or do you think it's a good time to buy? Right now, home prices are skyrocketing, and it has a lot to do with a sharp contraction of the supply of homes. And that's mainly due to the pandemic. A lot of people who are going to put their homes on the market kind of took them off due to, they didn't want sick people going in and out of their house. So we should see a lot of these homes are going to start hitting the market again. Once sellers get a bit of confidence in themselves, and essentially they're just like, okay, we're good. We're going to go off and do our thing now. So we should start seeing a bunch of homes hitting the market and prices stabilizing. But right now, we're still on the back end of the lockdown, so things are still going into recovery mode here. So I don't know what you guys think about what's going to happen in the future as far as the economy, the housing market. What are you guys doing to prepare for it? Leave your comments down below, and make sure you hit the like button, subscribe. I'll leave this article in the description so you guys can go ahead and read it for yourself. And then, as always, I'll see you guys in the next video.